Hello everybody, my name is Christian Charlo. Welcome to this market report. Today we're Thursday, February 26, 2015. Today folks, the name of the chronicle is going to be how markets are directionless. If we make a wrap-up of the situation though, today what we had the inflation numbers in the US and on the Canadian side. And with the inflation numbers, that shows that first of all in the US, inflation on a yearly basis is negative, minus 0.1%. And on the Canadian side, it has decreased to 1%. So taking this into account though, and tomorrow we're going to have several indicators that will be released in the US, such as GDP, the Michigan Consumer Sentiment Index. So it seems like investors are kind of waiting to see what are going to be the next catalysts to allow the markets to start a new cycle. Because if you take a look at the SPY situation here, look at this. On a yearly basis though, we actually are testing the top of an upward corridor there on the SPY, unable to actually break it. So far, this is a clear neutral formation. What I'd like to see on the SPY is to see the SPY to at least confirm a new bullish cycle. And we believe that the best strategy today, though, if you have already opened some positions around those area, is to actually take some profits when you can on your positions. But today, under those current market conditions, there are definitely few stocks that you could buy. Same situation too on the Dow Jones, where we actually have a clear neutral formation. Look at this on the Dow Jones here. Oops. Let me get it right here for the Dow. So you have a clear neutral formation on the Dow Jones here, bounded by this resistance, this support, and this resistance, and same thing too on the TSX. So all indices are actually at a neutral range. All of them are waiting for a new cycle. Now, on the TSX, is there a sector that is standing out today? Well, standing out is a strong word, but there's a sector I think that must be monitored. And one in this sector is the gold sector. The sector could start a bullish cycle. It's not yet confirming a solid takeoff. Yesterday on marketgurus.tv, that you can have access for free for 10 days just by clicking at the link below, we did recommend a stock on the gold sector, and that stock was Primero Mining. Oh, sorry, not Primero Mining. It was that stock here, PG, Premier Gold Mines, that we recommended on marketgurus.tv. And that stock here, we're still holding on to that long positions. As long as the stock remains above 230, which is that support, we're going to continue to hold on to that positions. So on the gold sector, we think that the best timing to actually continue to buy long positions will be when the sector will confirm a clear takeoff, and the sector will have to go above 183 points to confirm that. If you have bought some positions, if you're a subscriber of marketgurus.tv and I've bought the positions yesterday on February 25th, when we recommended that position as a buy, we think it's okay. You should continue to hold on to that positions. Are there some exceptions today with the markets? Even if markets are neutral, yes, there are some exceptions. This is the ones I wanted to show you. First of all is Mellanox technology that we find that's really nice. The thing is, when we have markets that are actually totally neutral, what we have discovered is that stocks that actually tend to perform well, are actually the ones that are breaking out an important resistance on a yearly basis, but also on a daily basis. And this is what we have on Mellanox technology. Look at this important resistance as being breaking out. So it's a clear buying signal. As your exit point, it has to be below that support, and that support is around 45.39. And why is it a support? Because at 45.39, this is the point where we actually tested it and rebounded. So this is a point where buyers were reluctant to let the stock go further down. So if you're buying that stock, make sure you put your exit point around 45.39. There's also Barnes & Noble that is a clear breakout, but the only thing that we don't like with Barnes & Noble, it's simply because the stock has already surged by 7.42%. So on marketgurus.tv, a type of stock like that will not be a stock that we would recommend among our analyst shares portfolio on marketgurus.tv. Now, if we take a look at other stock that's actually nice is GM Smucker in the consumer staples sector, exit point 111 below that support here on GM Smucker, and today it's a clear breakout. I wanted to bring to your attention here, with the inflation numbers that have been weak, the energy sector remains the laggard today on all indices, the TSX and also on the American side. And on the energy sector though, on the US, there are some short opportunities. But the only reason why on marketgurus.tv, that you can have access for free for 10 days just by clicking at the link below, the only reason why we have not recommended any stocks as a short in the energy sector is because in terms of the profit potential, we don't really have great profit potential on a lot of those stocks. Look at oil here. Oil did went slightly lower than $18, which is that support. I'm talking of USO, not the real oil. And it actually rebounded. We don't believe that oil could actually clearly break down that support and go lower, even lower than that bottom of January 29. So this is why even if a bearish ETF that tracks the energy sector in the US, which is ERY, we're not actually recommending to be buying that ETF for swing trading. There's a lot of congestions on that ETF. The 100-day, 200-day moving average is around this area. There's also resistance that's that $20. So because of those resistance, because of those moving average that is there, we think that it's kind of premature to actually buy those bearish ETF, even if intraday-wise, the ERY did perform well, but we don't believe that for swing trading it's a go. In terms of the short opportunities, there's ConocoPhillips. Yes, it's a clear breakdown. It's breaking that support. Could be a short opportunity, but on ConocoPhillips, 61.38 will be the target, and it's not even 10%. A stock like Chevron, it's a breakdown, yes, but look, it's already rebounding intraday. So can we believe in a breakdown like that? Another one is Spectra Energy. The downward momentum is being more sustained, which is good. Could head towards $33, but the thing is, look at this. The 10-day moving average, which is in red, remains above the 30-day moving average, which is in yellow. And usually what we have found is that when the 10-day moving average remains above the 30-day moving average, to short a stock that has those type of technical conditions is not appropriate. Because look at Spectra Energy, when the 10-day, which is in red, was below the 30-day moving average in yellow, that short opportunity around this area did perform really well. So can we have that when we have oil that still remains within its neutral range, and when we have a slight bearish shackle in the energy sector, when we have markets that remain neutral? I think the conditions are definitely not appropriate to actually do so. So with markets that are showing no direction, we believe that the best strategy remains to remain on the sideline. On the TSX, I think that the gold sector is the sector to be watched. On MarketGurus.tv, Premier Gold Mines is our pick. There are some exceptions as a breakout today. They're all highlighted with an S, but make sure you put your stop loss. And on the energy sector, we believe that oil USO will not go below $18 or will not go below the bottom of January 29. So this is why even if there is some short opportunity on the sector today, we don't think that it's the appropriate timing to short those stocks. It's better to wait for a clearer direction on the markets before acting. So that's it, folks. See you next week for your market report. My name is Christian Charlo. You can always chat with us on Facebook, on Twitter, share your strategies, and never forget, the more money you make, the happier we are. See you next week.